Hey, money magnet. Market makers are playing some tricks here, guys. Yesterday, you guys see this weird looking candle? They gave us a bearish pin candle. Bearish pin candle bar. And the way the market opened this morning, you guys see on the 15-minute chart. Holy moly, donut shop. That's the first candle. 945 candle. Broke down my 628 level. Got very close to hitting my 626 level. First setup of the day. Good. But then you guys see what happened. The rest of the day, it just melted up back to the upside. Retested that 628 level as a resistance. And instead of giving us a hot stove rejection, they hit it. Came back down. They hit it. They consolidated just below the resistance level, absorbing all the potential sell orders, and they went up, most likely hit all the stop losses, came back tested the breakout level, or in this case the recapture level, before pushing the SPY up higher. Volatility was pretty low, but for me, I mean, it was decent trading, not the best. Decent trading, not the best. Volatility still overall low. You look on the daily chart, you can see SPY closed yesterday at 628.7. Today it closed at 628.86. Not much of a difference, which means my overall plan is pretty much the same as yesterday. However, context is a little bit different here. You see, last Friday's candle on July 18th and Monday's candle the 21st was pretty far away from the 5 daily moving average. As you guys know, I love the 5 daily moving average. I know not everyone's a fan of it, but I'm a big fan of it. I got the idea from my mentor who used the 5 daily moving average a lot himself. I use it. Why did he use it? Well, he said there are 5 days in a week for trading, so we use the 5 daily moving average. I didn't question him, and I think it was a great idea because he made a lot of good points. And you can see that when the price is bullish, price stays above it a lot, but when it does get a pretty extended far away from it, it tends to eventually pull back before going for that potential higher high. So as I said, last Friday and Monday, it was pretty far away from the 5 daily moving average, but today we back tested it as a support and managed avoid a breakdown of support. So with that being said, you can also see that the 5 daily moving average is moving up. It's starting to creep up very close to my 628 level. So that makes that level that much more important to me. 628 level based on the fib level, sell zone, previous sell zone, now buy zone. And I tell you, for tomorrow, bulls really need to keep price above it, because now that the 5 daily moving average has been tested, while we look at the tendencies in the past when the 5 daily moving average has either been retested as support or recaptured. You see this example of this uptrend, it bounces off the 5 daily moving average. When it's bearish, it goes below it, but when it's bullish, it's above it. Eventually, when it extends too far away, it uses it as support before making higher highs. So if the bulls can clear 630 tomorrow, the odds of 631.5 and 630 hitting are a little bit higher. So pullbacks are healthy. Retesting this 5 daily moving average is very healthy. It could do better, of course, give us a deeper pullback. But when we're just getting micro dips, those back tests, those tests of the 5 daily moving average, as you can see, usually are good buying opportunities and lead to or continue to more bullishness. So above 628 and 630 clearing, it's a good chance we're going to get some new all-time highs. So now that we know how important that 628 level is, we need to see it break down. Break down that 628 level, break down the 5 daily moving average. We are not getting that. And keep in mind, one close below is not quite enough. We need to turn it into resistance, because when we look at downtrends, I was to zoom out here and we look at downtrends, like this is a little micro downtrend here. They spend time below the 5 daily moving average. And here's a really good downtrend here. Look at this strong downtrend we had from late February into mid-March. Strong downtrend to the downside. Spent majority of its time below the 5 daily moving average and rejecting from it. False breakout setups were very bearish. Look at this other leg down. Spent majority of its time below the 5 daily moving average. So we have to look at the current price action. Is that the case? Is that the case? Is price below the 5 daily moving average? It's not. So because it's not, Uncle Charlie's lean and opinion is still sided with the bulls. I know a lot of time I'm just giving you guys unbiased price action analysis and trade ideas, but if you want my opinion, it's still overall bullish until and unless the price action behavior changes and price start closing multiple days, closing below that moving average. Of course, breaking down my fib level 628 and 626 would definitely help the bears case. Triple Q, speaking of 5 daily moving average, today that level closed right there, right around that 5 daily moving average. So the bulls managed to avoid a daily chart breakdown. Can it happen tomorrow? I tell you, it's looking a bit strong on the sell side. Unlike you look at this daily chart on SPY, it's looking a bit confusing. But when you look at QQQ, it's looking a bit more topish. Now, what would be confirmation? Of course, breaking down 560, 558.5, and 557. Those would be your bearish confirmation. Get price below that 5 daily moving average. But if we get back above and clear 562 and 563.3, new all-time highs incoming. So the bears are almost there. They're closing just above it or right around it. That close shows lack of buying strength. So we'll see what happens tomorrow. 562 and 563.3 clears. We are bullish, but I'm telling you, below 560 and 558.5, we are bearish. Here is the Tesla. You guys can see on this move up since July 10th when it recaptured the 5 daily moving average. It's been bouncing off of it, pushing upwards. Today, it retested it as support and managed to push upwards once again, closing right around my fib level of 331.5. That will be the equilibrium level for tomorrow. If above, we can get more upside, but clearing 333 and 335 is a must to get to 338, 340, and maybe hit the top of this triangle pattern around 343.5. If we are to be bearish, staying below 331.5 is needed. The 5 daily moving average is all the way down at 326.2. So to get there, we need to break down 330 and 328, and then below 326.2, I would feel a little bit more bearish, possibly down to 322, 320.5. In the bottom of the triangle pattern, it's all the way down at 314.5-ish area. NVDA finally gave us a pullback. It's been chopping. I mentioned the 171 level and the 169 level. It broke down. Let's see if there's going to be some bearish follow through. The next support level to watch is at 165. That was right around the gap area, 165.5-ish. If it breaks down, we can possibly head all the way down to my trend line, which is around 161. To retest it as support, we'll see if we get a bounce there. But below that, we'll get into deeper correction mode. Loss of this trend line should send NVDA in correction mode. There's the pullback, a regular pullback, maybe to retest this trend line and bounce. But if we break down that trend line, it's more than a pullback. It's correction mode. That would be very bearish. Now, this breakdown will only be canceled or a fake one if 169 and 171 can recapture. Especially this, it lost the 5 daily moving average. So it's looking a bit toppy. So it'll need to recapture 169 and 171 for the false breakdown setup, trap the bears, recapture those levels, and we should go back to all-time highs. Otherwise, we're in pullback mode down to 161, and below 161 is correction mode. Coin also pulled it back, and it went and hit this multi-week trend line that I have here, and it also closed below the 5 daily moving average. For tomorrow to be bearish, 404, 402, and 400.3 must fail, and that would actually send us down to 399 if those levels are lost. 399 is based on that multi-week trend line, so below 399 should send us into correction mode in a much deeper pullback. Maybe another 10, 20, and I wouldn't be another $30 move to the downside. I wouldn't be surprised. I would trust no bounce unless we can recapture 406, 410, 411.6, and 413. Recapturing all those levels would make today's breakdown false and get us back above the 5 daily moving average. And as I've been drilling this whole video, getting back above the 5 daily moving average would definitely be bullish. And last but certainly not least, here is IWM. It was looking bearish yesterday, but the bulls somehow bounced off that 221.5 level and gave us a slight close above the 223 level as well. As long as above it, we can go and retest the top of the triangle pattern around 225. And if 225 clears, IWM is in breakout mode. For today's bounce to be a dead cat bounce, both the 223 and the 221.5 level must break down to put 220 and 218 back in play to retest the bottom of the triangle. And I tell you, if we break down the triangle around 218 level, it will be extremely bearish for IWM. Other than that, that's all I have. Thank you so much for watching. It really means a lot. Remember, you are a money magnet. You are a master trader. Don't let these market makers beat us. They got nothing on us. They got nothing on you. Peace.